Hi, it's Doc for the 12-Minute Trading Market Minute for Tuesday, the 16th of August. The biggest question today, the S&Ps are up almost 19% off of the lows in June. Is this just a bear market rally, or is this the beginning of the next bull market? Here's the S&P 500 on a fractal chart, and what we have here is the monthly chart on the left-hand side, the weekly chart, and the daily. These are all approximately separated by a factor of 5. Now, to answer this question, are we in the next phase of the bull market, or is this just a bear market rally? What we need to answer is whether or not this monthly move becomes a lower high and rolls over. So if this is just a bear market rally, then we'll see this just maybe pop a little bit higher and then roll over, and the next wave of selling can be especially bad, as we can look back on what happened back here in the last true bear market that we had. And we're kind of at this point right now where we could see this rally up, and this is a monthly lower high, which rolled over and just plunged down into the lower 600s. So how do we determine whether or not this is going to be just a stunted little rally, turn out to be a lower high in the monthly chart and roll over, or not? This is where we need to use the smaller time frames to understand that. Now, you can see the converse of this when eventually the bear market bottomed out and we started to rally higher again. There was a lot of people, myself included, that thought, okay, this is just another bear market rally. And then what happened was the price started to drop down. Everybody got bearish again, same deal. And they got excited for what they thought was going to be a retest of the bottom. And then what happened was it went in the absolute opposite direction. And this is sort of the notion of what's going on here. When we determine where the majority of traders are leaning and what direction they're leaning in, the price will quite often go in the opposite direction from that and cause a lot of pain. That's exactly what happened here. Everybody was leaning long. That's exactly what happened here. Everybody was leaning to the short side and they got squeezed out. So where are we right now? Well, quite frankly, I think a lot of people are buying into the bear market rally routine and thinking that, well, here we go. We're coming up to the 200-day moving average. We're just going to drop like a stone from here. And I don't want to go along with that just because it's the easy thing to do, because you can just read Twitter and see all these other people overlaying today's charts with 2008 and just expecting that lightning will strike twice in the same place. So what I'd rather do is use the price charts to understand what's happening with the character. Now, to do that, we need to go into the daily chart. Let's zoom in on the daily chart and get a better view of what's going on. You can see this green line here. This is the 200-day moving average, and it's quite often a delineator between bull and bear markets. Well, there we are. We're almost at the 200 right now. And it's no coincidence that the same exact thing happened over here back in 2008. The price rallied right up to the 200, got rejected there and started. So I think we will get some type of reaction here from the confluence of this 200-day moving average, as well as, let's go ahead and zoom out on this so you can see this again, this descending trend line, which has connected all of the major highs since the beginning of the year. So it's very likely that we'll get some type of reaction from this point. We'll get profit taking from the bulls that have been long. They'll go ahead and trim their position size. That'll cause some selling. There may be some bears that are sitting right there at the trend line. They will add some overhead supply. So it would not be unexpected to see some type of reaction here to the downside. Now, I believe that if this starts to work down below 4,200 or thereabouts, this is going to attract a lot of excitement from the weekend bears that are going to go, oh man, here we go again. This is where things get really ugly. And usually what acts as a catalyst for something like this is some kind of unexpected negative news that comes out of either a bad earnings report, or it could be some kind of bad economic report, or it could actually be a Fed personality grabbing a microphone and saying the wrong thing. In any case, I think we will get some type of distribution here in the near future, which could happen at some point into the end of August. Now, what happens after that is everything. So whether or not that bounces up into a lower high, if this bounces up into a lower high and then rolls over again, then the market's toast. More than likely, it's going to go, at the very least, retest the lows. However, if the opposite occurs, if this gets so negative down here that the institutional bulls decide to go for the squeeze, this could be a very, very strong move and could get us in the month of September, October, during that time frame there, back near the all-time highs, believe it or not. So I think we have a potential for a major tipping point here in the next few weeks, and it will start with a little bit of selling. It will start with a little bit of profit taking, and where it goes from there is going to be the key towards where this market goes into the end of the year. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.